got you off your knees, put you right back on your feet, just so you could take advantage of me. Tell me how's it feel sitting up there, feeling so high but too far away to hold me. You know I'm the one who put you out there, name in the sky. Does it ever get lonely thinking you could live without me? Live without me. You know I'm the one who put you out there. I don't know why. Tell me how's it feel sitting up there, feeling so high but too far away to hold me. You know I'm the one who put you out there, name in the sky. Does it ever get lonely thinking you could live without me? Live without me. You know I'm the one who put you out there. I don't know why. Thinking you could live without me. Live without me. You know I'm the one who put you out there. I don't know why. Thinking you could live without What would they say? What would they do? Would it be trouble if they knew? I'm trying hard to make you see.
How about now? Can you guys hear me now?
All that you are.
But this may actually mess up the music, so
I know that it's a secret. I'm gonna keep it, but I want the lights on. Yeah, I want the lights on. And I don't wanna run away anymore. Leave the lights on. Leave the lights on. I know that
I guess
it's a
maybe
secret.
we're gonna need to push this headphones. Push it a bit here.
Lights on. And I don't wanna run away anymore. Leave the lights on. Leave the lights on. Leave the lights on.
Having technical difficulties, the markers aren't just dumping.
Lights on.
The audio devices are dumping. How about now? This should have fixed this. I hope. my god! Bitcoin's back now. You missed nothing. You're gone for a year, but now you missed nothing. How's that? We do have a lot to talk about. This is a very impromptu stream, so guys, I'm apologies, but I usually am anyways, but even in regards to just setting up my environments, because pretty much without a t-shirt, 2 minutes into the timing of the stream, like, oh damn, I gotta put on a freaking t-shirt, and you're busy talking to the seedlings in the live chat, and oh my god, AJ, you're still up, or are you just waking up? Kusha says the mic is not good. Kusha's likely going to have to fix this for me. So is the music fine though? Can you guys hear the music? Kusha's here now, by the way. Say hi. She's trying to fix this for me. But yeah, delayed. Maybe it's good now. How about now, guys? How about now? Bit muffled, eh? I'm not sure what's going on. Like, I think I messed up something with. How about? How's this now, guys? Yeah. Let's see. Kusha's trying to sort out technical difficulties while they're live. It's like I'm in the bathroom. Alright, let me try something. Picking up this. So, oh no, look at that. This is amazing. Now guys, let us know. It should be much better. Is it? Cool. So you see, it was that. I'm not sure how I'm gonna hear you though. Okay, but I figured out. Alright, but is the music still playing for you guys, or what's going on there? Music is fine too. Okay, that's surprising. Cool. All right. So this didn't become a. This wasn't a technical analysis stream. It was a technical difficulty stream. Marin, I'm not sure if the stream's gonna be up later, especially now. I kind of foresaw things going wrong this stream, considering it was so impromptu, which is why I just wanted to kind of be relaxed the stream and not have any of the issues crowd people's time when they do come back later to try and watch some good mango content, right? Because they're gonna see all of this and they're gonna be like, what the hell is this nonsense? Hit the dislike button, and then YouTube punishes our channel. So these kind of impromptu streams, I'm just gonna not put them up later, or rather they're not gonna be available later, just to save the channel from having YouTube punish us all the time. I know it sucks, man, but like, if YouTube is gonna incentivize this kind of behavior just to survive as a channel, stupid. Alrighty, so are we ready to begin? I do want to get Krisha on here though, so it's gonna be a bit of a... Let's see if I can do it. Not sure if I'll be able to, considering the technical difficulties I just had. But I'm gonna try one last time, just for you guys. Alright, so first confirm if you guys can hear me a-okay. You guys can hear me a-okay? Okay, cool. So now I'm gonna try to get my Discord to pick up Krisha. Alright, so Krisha, can you say something? Just to confirm. So I'm not sure you guys can probably hear Krisha, right? Can you guys hear Krisha? Confirm if you guys can. Probably not, if I understand what's going on. Yeah, no Krisha, okay. So unfortunately, we are gonna have to drop the music, I think, and instead have Krisha. Yeah. Krisha, say something. I don't think they can hear you. God damn it. Hold up. One last try, guys. One last attempt. I think everyone wants Krisha here, so Krisha, I think they should be able to hear you now.
Oh, what's cracking, you guys?
Were you just whispering to yourself about wings?
I was. I'm really looking.
Wow.
We're having wings for dinner tonight. I'm cooking. So I got a new best friend. My best friend is the air fryer that we got recently, and holy moly, like that thing. You know, you can literally throw every meal in there, and voila, done. It's like your own personal cook at home. It's great.
Krisha, I just dropped the camera on my keyboard. Alright. This has been a horrendous start to a stream, but
it was very impromptu, so we didn't really get
yeah.
We didn't get a chance to let's say prepare. Okay, can you guys hear me now? Okay, Krisha's barely audible, says Vishal. Yeah, but it's really low.
Okay.
Krisha, you need to turn your mic up.
Yeah, Krisha, you gotta turn your
Sean, is it
mic
there
up.
for you?
That's what you gotta do on your end. I'm gonna try to do what I can on my end.
Here we got an air fryer.
Alright, so Krisha, go again.
And hello. Hey, I can read Hindi too. It says up.
Can you guys hear her?
Never mind.
Alright.
You can hear you both. Krisha's a bit low. Okay. There we go.
Alright, you guys.
There we go.
Finally, I think I'm gonna go. I'm actually just exhausted doing this. I'm legit just exhausted doing this. I'm gonna need a coffee. Holy man. Whew, okay.
Alright, we can get this party started, guys.
Alright. Jesus. So with that, good morning, everyone. My name is Sean Dexter, and I welcome you back to the Mango live stream. This is an impromptu live stream. Wasn't expecting to do one, so I do apologize for all the technical difficulties, and I do thank you for being so freaking patient and actually helping us sort through the audio problems that we just had. I'm not entirely sure why it occurred. I kind of have an idea, but I'm not entirely. With that, how are you guys all doing? How are you guys doing during this Bitcoin dump that we can I say I don't say I told you so. I don't want to say I told you so, but can I say that Mango was positioned through a pure TA perspective? Right, just using TA alone, we were ready for this kind of move, and yeah, we have a few trade updates to be talking about today that we will explain. I'm sure you guys are going to have a lot of questions, but all in all, it was essentially just using our foundational concepts that we've been learning and teaching to you guys over here for the past years now. Right, it's been more than 2 years now, I believe, that we've been using pretty much the same thing over and over again. Trend analysis, trend trading. As long as the trend is up, we will be bullish. As soon as we lose that trend, can't be bullish, not with conviction at the very least. But now, things are beginning to get interesting. Krisha, what are your thoughts?
I have so many thoughts right now. I mean, I'm currently in a bunch of short positions, but also buying spot BTC. So, yeah, I mean, I'm not. Let's first start with a bit of pleasantries. Also, I just want to say, Vishal, congratulations, man! Massive shout out, massive congratulations to you and your wife.
Oh yeah,
Got a
Vishal.
new little mango on the way.
Congratulations, buddy. Congratulations. Ace says barely. So you guys can't hear us, or I'm still struggling to figure out whether.
Barely hear me. I don't think they can hear me properly. Okay, I'm gonna try and just keep my volume as is. Just increase it a bit already, so hopefully that helps.
Alrighty. Stop one. Okay, so for today's agenda, we will be discussing Krisha's trades. I'll talk to you guys about my trades briefly. My trades are a bit more nuanced, a bit more complex, and a little bit more conservative than Krisha's trades were. She's being rewarded for her short trades. And I'm finally being rewarded for my trades as well. I have been taking short trades as well, but not the way Krisha took them. So we'll talk about her trades because I'm pretty sure you guys will be able to learn a lot more from her trades than from my trades, unless you guys are options traders. If you guys are options traders, then you guys will benefit from listening to the updates on my trades as well. If you guys don't really trade options, you guys are not going to be able to take much from it, but at the very least, you guys can start learning how you can position in these sort of environments in a far more conservative manner to be able to take advantage of the bear moves and even the sideways moves and the highly volatile moves that crypto especially can see. So we're going to be giving you guys an update on that. We're going to be talking about Bitcoin dominance. Bitcoin dominance is looking especially interesting in this zone over here. I think we'll talk a little bit about the NFT market, Krisha, a tad bit. I'll just give you guys my thoughts on how I think things may play out, right, in regards to NFTs, Ethereum, how that relates to Bitcoin, whether NFTs have any future at all whatsoever, whether I think it's a scam. Kusha will give you her thoughts as well. And yeah, Kusha, anything else that you think we should be talking about today? The reason I want to go over what we will be talking about is because if we don't, we're just going to be all over the place. So do you have anything that you think we should be talking about today?
No, I think that covers it. I think the more sort of succinct it is, and the more narrow the topics of discussion is, it's going to keep us on track. So price action is going to be oopsies the first thing, of course, and then we can sort of flesh out the whole thing with NFTs and stuff. We'll talk about our trade setups, price action in general, and just sentiment, where price could possibly go, and what to be prepared for. So essentially, lessons we learned as well from the last bear market. So much of this is going to be about price action.
Okay, cool. Since we are gonna be talking about price action, I think we'll start with an update on both of our trades. We'll start with the trades I've taken on Bitcoin. Those are the only real meaningful trades I do have, and essentially I had two I would call it one trade, and the second trade was a rolling trade that I kept taking over and over again throughout the month. The first trade was essentially a long volatility trade that had a longer time frame horizon. And I talked to you guys about that yesterday. Essentially, well, I gave you guys an initial explanation of this trade all the way back at the beginning of the month, where I said, okay, listen, guys, based on my view on the market, I'm expecting a volatile move. Okay, and we can go back to the daily time frame to explain this. And these horizontals over here explain it perfectly. So my thesis on what could happen over the next 2 months, right, Jan and Feb, was either we reverse from over here and break 53k, in which case we're going to have a very volatile move. We're going to break towards the upside, right? Maybe retest the $60,000 region at the very least. Oh, I should really switch to the charts. Apologies. Okay, right over here. Yeah. So either we break 53,000 dollars, we bounce. Okay, at the time we were sitting around $45,000, $44,000, right, somewhere around here. We were trading this range, and I said, okay, we either break towards the upside, and if we do break 53k, we're likely going to test 60,000 by around Feb. So that was one possible direction that we could take. Or we break 40k, right? We break 40k towards the downside, or rather 44k towards the downside, and if we do that, I'm expecting a volatile move towards the downside by, again, end of Feb. So my trade idea was essentially we break 53k and we make a big move, or we break 44k and we make a big move towards the downside. So I wanted to construct a trade, okay, that essentially said we are getting a volatile move by the end of Feb. That was my trade, okay? So you guys are probably, those of you who are new over here are probably thinking, well, he's essentially saying we either go up and he makes money, or we go down and he makes money, right? So he wins either way, right? So it kind of sounds like, oh, go up, make money, go down, make money, right? Sounds a little bit stupid, but no, in those kind of scenarios too, you can still lose money if the trade goes sideways. And that was essentially my trade. My trade was, if we go sideways, right, till the end of Feb, I am going to lose money. If we go up and break 53K, I make money. Or if we break 40K, right? So if we broke 44-ish K, I kind of break even. But if we broke 40K, that's when I really start making good money. And now that money starts kind of getting exponential, right? So that's the scenario we are in right now, right? So yeah, and throughout the month, what I was essentially doing was using my horizontals over here. I've been talking to you guys about how 46K was a key level. Before that, it was 53K to 50-ish K. I was selling calls over here at around 50K initially, then I started selling calls over here at around 46K. So selling calls, collecting that premium on a weekly basis and a daily basis. So I was playing those time frames. So the short time frames, I was selling calls, and on the long time frames, I was essentially long volatility. That was my trade. I had a long vol trade, right? Very, very simple to construct all of these trades, guys, once you understand the foundations of how these instruments work. So now, while they may confuse you, I'm just going through it really, really fast, so it's sounding intimidating, but over time I'll teach all of these things to you guys slowly and surely. Don't worry about it. Kind of like how I've been teaching you guys the bond market, right? The rest of the traditional space will want you guys to feel intimidated by these ideas, but at Mango, we're here to make it sound simple to you. Doesn't mean that it's not dangerous to trade these instruments, eh? It is, so don't just dive into it. Once you understand them, you can use them to your advantage to be safe. Remember what I said at the beginning of the stream? I'm being conservative over here by putting on these kind of trades. I'm being conservative. Krisha is actually the one who's taking on risk and putting on trades that you guys will learn from in today's explanation. But because I understand these instruments, I consider them conservative approaches to trading bear markets. All right, so before Krisha explains her trades on, I think she has a short on Ethereum that's doing fantastic and a short on Matic that is doing fantastic. Do you guys have any questions on Bitcoin before she talks about Ethereum and Matic? Hey, how's it going, Sherwin? Good to see you, buddy. Lucas is in here too. How's it going, Lucas? Who else do we have? Ashok is in here, but he retracted his message. AJ, how's it going, AJ? And Raja is here too. Nice. Hey, Raja. He just says hi, Sean. Nice. Yeah, you missed a lot, Sherwin. You missed a lot of technical difficulties that we had. So you dodged a lot. So, Krisha, it doesn't seem like anyone has any questions.
No questions on Bitcoin?
Hey, Robert, how's it going? Yeah, apparently nobody cares about Bitcoin.
It's got to be something on Bitcoin.
Should I turn up the music now?
You can try, actually. Let's see if it works.
Awesome music, guys.
The NFT space is still on freaking fire, but yeah, we'll discuss that in a bit. But anything on Bitcoin, so I'm curious if you think Bitcoin will bounce off the 4,200 EMA. So Raja, you actually had mentioned that in my video. I want to go ahead and pull that up. So you're saying the 4-day 200 EMA, right?
That's at 34,000.
Let's see where that's coming in at. Oops, this is Ethereum on my chart. Oh, we're so close. 33.7K. Yeah,
I mean, what's your thesis for this?
Yeah.
Right. I could say yes or no, but what's your thesis? I've not been looking at this, so.
It seems like it's a good level, right? It's actually a pretty decent level, because every time Bitcoin's actually come down there and say we've gotten supported, it's been a good reference point at the very least to trade off of. If it breaks, price is going to continue down further. And well, if we get supported on there and we start putting in rounded formations and reversal like formations, then perhaps we get the bounce on the 200. But as far as level, it being a crucial level is concerned, I think it's got pretty decent playthrough.
Yep.
I think there's a good catch on that, definitely. So it'll be the next tell whether or not Bitcoin goes down further or we get a bounce. Let's put it that way.
So during this zone over here, I was playing the 21 EMA, the 200 EMA and the 200 moving average on the 4-day time frame on Bitcoin, right? Kusha, doesn't know what I'm talking about. Do you know what I'm talking about? Okay, I'm talking about this late November period where we played the ascending triangle on the 4-day time frame, and we had a rally to. I think out of all the periods, this period was the period I was most proud of. I think so. There have been other moments that I was really proud of my trading, but this period over here was, I guess because it was so heavily based on the 4-day time frame that I liked it. But either way, going back over here, the reason I really like the zone was because I nailed the bottom and I happened to nail the top too, just by purely trading technical analysis. Right? I wasn't trying to nail the bottom or the top. I don't try to say, hey, are we going to bounce here? Are we going to reverse here? I was just using Mango methodology. And now looking back in hindsight, we're like, damn, we caught that entire run, right? And you don't need to catch everything, man. But these few wins that you do catch, they begin to count in the long run. So back then, the reason I was trading the 4-day 200 exponential moving average, Raja, to answer you, is because we were respecting it over and over and over and over again. It's been a while now since we've come down to test it. So let's see what happens over here. I wonder, do we do the same thing? Do we do the same thing over here? Do we do something like this? Test it, break it, and then we put in an ascending triangle between the 200 exponential and the 200 moving average. Kusha, do you see that? Do you see what I'm drawing?
Yes.
And then we break towards the upside. That would be so... Ooh.
So I think the number one question that everyone's asking, and they're probably forgetting, at least I'm seeing this resonate across the board right now, is everyone's looking for the next bounce. They're like, I don't see a bounce. When's the next bounce? And this is like a very predominant question right now that's just sort of lingering out there. But I'll say this, at the very least, I think we come down to around that 37K region. When is the bounce? Nobody knows, okay? Anyone giving you a timeline on these things, they don't know what they're talking about. Things could fall further, okay? It's just about understanding, getting in on those critical levels. Now, we've identified one being the 200 EMA, for instance. We've seen that Bitcoin has had decent playthrough. And if there, we see a break on that level, that's when we know that, okay, you know what, there's probably further downside to go. As far as the official bounce is concerned, we can come up with like decent levels in that $22,000 region, but no one will ever sort of tell you when the bounce is really going to come in. You're going to have to look at the structure, you're going to have to look at the formation, and then accordingly play it. One tip I'm going to give everyone out there right now, and this is something that we have been talking about even throughout the bull market, right? Throughout the bull market, what's that one thing that we've been talking about? Zoom the hell out. If you zoomed out of the chart, you'll know that Bitcoin was sort of just it had sort of broken that uptrend a very, very, very long time ago, right? The entire signature changed, telling you to approach this with a bit more caution and possibly even just start playing the ranges as opposed to positioning for trend trades.
Yep.
Right?
When was the time, like think about when was the time that Mango got cautious to bearish, right? When we started looking for that big capitulation move to the 2-day. Okay, think about this, guys. Think about this. First, not did we only look for a move towards a downside and us buy the bounce, right? So essentially, I want you guys to think about the psychology shift at Mango over here on the 2-day time frame. Before this candle over here, before this big candle towards the downside, okay, we call this move over here. Go back and watch that entire period where we were looking for this big capitulation move. Capitulation. I kept doing it like I kept putting it in air quotes because of this very idea that I did not expect the bounce to continue. I specifically said that I will be trading that move as a range trade. I will be buying the 200 moving average, but I will not be looking for this to trend reverse, right? If it did, I would have a small position left in case it did, but I wasn't expecting it to, which is why I didn't hold on to it as a trend reversal trade. So when did we actually start getting bearish on this? And when was the time? This was around the same time where I had a little bit of a issue with the entire bull market support band narrative, right? And now you guys are seeing why. I felt it was kind of responsible to put forward that idea and kind of change your lines and your horizontals, but people inform me that I was misinformed on what the YouTuber was saying, etc., etc. So yeah, either way though, the idea over there was, if someone is pushing that idea towards you that, hey, this is a bull market support band and it's going to hold, and then they change their EMAs, and I mean, if there's anyone doing that in the future, right, whether I was misinformed or not, just let that be a red flag, in my opinion. But that being said, that was around the time where I was like, I'm not buying this, man. Bull market support band or not, there was a shift in what was happening in the market. And this is coming from Mango, who was bullish over here. While everyone was bearish, we were bullish over here, right? Because of TA, because of macro factors, etc., etc. We were bullish over here, and we got shit for being bullish over here, right? Now, over here, we are bearish. Very similar conditions in terms of TA, but if you add a few other factors in, it just wasn't sitting well to be bullish over here, in my opinion. And now we're seeing why, right? One of the biggest things though, Krisha, was the fact that we lost the dynamic again, the 2-day dynamic, right? And we rejected off it. Like, we lost it over here, rejected, came down, had that down move towards the 200 moving average, and then rejected off it again, right? I was like, okay, like this isn't going well. So
the weekly dynamic was the main tell. How many of you caught the weekly dynamic?
No.
Like, for those of you who have access to it, even the weekly.
Yeah, no, weekly was good. Yeah, no, I agree.
Yeah, the weekly was also good. Like, the weekly actually gave us the tell, and it gave people enough time to understand where the trend was at. Because look at the amount of rejections we got on the weekly dynamic. It was insane. It's a red, first off. We got 1, 2, 3, 4 weekly candles just constantly trying to get up past it and getting rejected right off of it, telling us that, hey, the trend is, you know, it's sort of done. Like, the bulls have lost control. The bears have it this time. So, I mean, people got enough time to understand what the trend's at over there.
The thing is, Krisha, the 2-day gave us the call at 58,000-ish to 60,000. The 2-day dynamic gave us the call at $60,000. That's when we stopped being bullish. And by the way, guys, I was bullish here, right? I was bullish at the top. And this is an example of how you can be a trend trader, be bullish at the top, and then get out very, very quickly. In hindsight, right, it seems quick now, because at the time when we flipped over here, it seemed late. Why? Because we didn't get the top. We weren't bearish at the top. But does it really matter now when you consider 66K versus 58K? Doesn't seem like a big difference now, eh? Right? This is what I mean. Stay with the trend and you'll be fine as long as you're disciplined. Be disciplined. Stay with the trend. It may seem like you're being late, but it's much better to stay with the trend, right? And not catch the top, not catch the bottom, because in hindsight, it will look like the top, it will look like the bottom. Because now, the 2-day call over here by the dynamic looks like the top. Similar to going back all the way to 2019, when I talk about the 4-day now, I can be a genius, right? And sound like, hey, I caught the bottom in the zone over here. Where was it? Over here, yeah. Because if I remember correctly, I got super long at around 7,600, right? But there were people who were trying to get long throughout this entire period at 6,900, 6,800, 6,500, and they kept getting chopped out of their position because they didn't have conviction in their position. I'd rather wait, be mango, be stress-free, not give a rat's ass. Krisha and I were enjoying our vacation during this period, by the way, right? And then when the trigger came in, I just went in with conviction. While everyone else got chopped out of their positions, that's when I turned bullish, and then we caught this entire move, right? That's why I say, do it mango. You don't need to catch the top. You don't need to catch the bottom. Wait for conviction, wait for the trend reversal, wait for the trigger, and then in hindsight, it's going to look like you caught the top and the bottom anyways. So yeah, sorry, Kusha, I didn't mean to go on.
No, that's good. I feel like, okay, so right now let's establish a couple of things, okay? Bitcoin has lost its bullish structure. I think we can all agree with that, okay? I think there's not a bearish tilt, but we're getting into a more bearish sort of a phase of the market right now. And I want to give you guys a couple of things that I learned from the last bear market. Okay, now these are lessons I wish I had, but I didn't. So the first lesson is that a bear market is very, very short-lived, right? And that is also because of the macroeconomic, let's say, foundations of the world right now, right? Because money, there's no backing to money anymore. They just print at their own whim. So that's the number one thing, is that bear markets are very short-lived. And in the middle of a bear market, now this is important, so listen up. In the middle of the bear market, you can have bull rallies. All right, you'll have bull rallies that will rally up only to set in a new lower high. And those rallies can be intense enough to take you out of your short position if there's no risk management on that position. Yep,
exactly.
Okay, it will freaking outlive your position. It will get you out of there. You're going to get scared out of your position if you are not positioned, if you are not if that trade has not been risk managed. All right, so even when you do have these bullish rallies in the middle of bear markets, macro bear markets, are intense. And if you want to get a good sort of idea of that, just zoom out, get on over to weekly, Bitcoin on the weekly time frame. Sean, if you can just do that for them. Get on over to Bitcoin's weekly, take them back to the last bear market where we put in a series of lower highs, right? And go and look at every time we rallied, all right? The first rally from around that 5K region to around 11K, right? This is when Bitcoin dropped from $20,000. That was a good 96%, guys. That was the rally, 96% from the wick to the candle high. Okay, the next rally that happened from once again around 6K to around 9K, that was 50%. And mind you, this was all in the middle of a freaking bear market.
That's true.
Right. So these when you get the bear dumps, and this is why I always say I play the ranges. Okay, I'm always playing the ranges. Even right now on my 2 open short positions, which is Ethereum and Matic, I'm playing the ranges on them. All right. So be careful of this. If you're position relative to a major key level, especially if you're positioning to the downside. Okay, position relative to a major key level. Do not just hop into a short position in the middle of a range. It's just dangerous.
Volatility begets volatility, guys. Which is why the Mango risk management system, and those of you who are on the seed program, listen to this really, really well, especially in conjugation with what Krisha just said. She talked about how we rallied during this bear market 100% or 50%. And then the volatility started compressing, right? Now, I want all of you guys, especially those of you who are in the C program, but those of you who are not in the C program, also listen to this because this is really important. Volatility begets volatility, and it can have a compounding factor in terms of compression and expansion, okay? So if you guys are on the C program, you guys know how we, especially in our risk management and the risk management tool sheet and the way the position sizing is done for you, all of the calculations, a major factor is volatility, right? Which is why it protects you. The risk management system in C protects you from these bear markets wrecking you heavily, or rather, let's say a bull market that reverses into a bear market, you will be protected from that. Now think about what the volatility would have been leading into 20,000, right? Leading to the $20,000 high. We would have had very high volatility. Because of that, the Mango risk management system would have protected you during this entire period where we were like chopping up and down. But also, on the flip side, the reason it's so genius, and Trader Fraser, I PM'd him today, I wonder where he is. Trader Fraser used to say this to you guys all the time, okay? Especially those of you who are old school seedlings. He's like, Sean has literally given you guys his entire trading edge in the Mango seed program, because he watched, and Trader Fraser is a really good trader. And he watched the entire seed program and he's like, holy shit, Sean, you gave it all to them. And I've done that, guys. I've given it all to you guys. Because if you think about it now, if you traded the entire bear market, you would have realized that while the C program protected you during this entire phase, over here, it would have got you to be extremely aggressive towards the downside, right? Which is why if you actually followed the system throughout, at this capitulation wick over here, or this capitulation zone, you would have made a killing, which is what this move over here, by the way, guys, is what changed my life. This is what changed my life. This dump over here on Bitcoin changed my life forever. And then just following the same system, we caught this right after. Like 2 big moves in the crypto market alone changed my life. So all of this to say is that you can use volatility to your advantage as long as you stay disciplined. But if you start saying, hey, I'm going to get in a big position size over here at $5,800 because Bitcoin dumped all the way down from 20,000, that kind of mentality will get you wrecked in the long run, even though you caught a good move in the short run. So always think long run, because Krisha is right. You caught a 100% rally towards the upside if you managed to long the wick over here. But let's say that same mentality kept you getting heavier and heavier on your position sizes towards the upside. Wouldn't have ended well, guys. It would not have ended well. So all of this to say, stay true to your system, because while it may be painful in the beginning, or you may feel like your position size is too low in the beginning, right? At the time, you may feel, oh man, it's not big enough of a position. What if this rally is 100%? I bought 5,800 and it rallied all the way to 11,000. I should have bought more. F Sean, F everything. Well, at the time it was painful, but in the long run you would have been thanking me. And there's so many seedlings who come back to me and say, damn Sean, I wish I just followed your system. How many of you who are on the C program right now went through the pain of not following the system? I did. I'm a seedling who went through the pain of not following the system, right? Which is why I created the program, the course, in a structured way for you guys to not make my mistakes. So, yeah, again, sorry, Krisha. I don't know. I'm feeling really like...
No, this is a good time. This is
the time for everyone to learn.
Exactly this. Okay, this is the time. And by the way, it was during these phases of the market that Sean and I learned the most. I learned everything I know in the bear market thanks to him. He managed to dispense all of that knowledge on me, but I managed to catch the same 6K capitulation that sort of turned my account around. But it's during these phases of the market that you actually understand how markets move. It's that macro picture, and this is where you get it, especially for those of you who just entered crypto in this most recent bull market. That means you've sort of observed the bull run, okay, but you do not know what a bear market looks like, and you're beginning to see how it all unfolds. And this is going to play out, by the way, not just in crypto, but even in the traditional space. On every chart that you pull up, you'll notice that it moves in cycles. All right, it's just about understanding, hey, where's the best sort of bid at? Now, just to, for those of you asking, right, you know, when can we expect the bounce? What should we look for? Well, in that 3K region, Sean, can you like maybe pan your chart on over to the 3K region?
Okay. Yeah.
Right, I'm just sorry, your the chart is sort of lagging. Just tap it. Okay, there we go. All right, so you can see that the 3K region where Sean's got is horizontal there, right? I want you to notice. I want you guys to see. Look at the price structure. All right, this is currently the weekly time frame. Look at the price structure on that chart, and that's essentially what we want to see when the trend is turning around. Now that, by the way, played out within a time frame of 6 months. Okay, but notice what price did there. We put in a consolidation, a prolonged consolidation, panned out for 6 months, but we put in consecutive higher lows on the chart.
Yeah.
And then we had a break, right? And also notice the highs. The highs weren't giving in too much. We were just putting in slow, higher lows. And by the way, during that phase, there were other signs in the market that was telling us that, hey, you know what? Perhaps things are turning around. We had coins like LTC and BNB, you know, they had like these crazy massive, let's say 2x, 3x rallies to the upside. Right, so we start seeing those sort of signs in the market of revival. So a lot of the coins that got trashed started running as soon as Bitcoin was coiling up towards that 4 or 5K region, right? So that is basically giving you signs of an extended, or rather the trend really turning around. So these are the things that you look for in the market to give you a tip in that, hey, you know what, perhaps this is that reversal that we're looking for. But the key thing over here is the structure, guys. Look at that structure there. Right, compared to when Bitcoin was putting in a series of very, very clear lower highs on the chart leading into 6K.
Yep.
So that's essentially what we're looking for.
So, Krisha, how long do you think this okay? So I just drew out a bunch of like trend lines, or rather like ascending squigglies on my chart, depicting the consolidations that led to reversals on Bitcoin. I'm noticing like a variation on how aggressive the consolidations were, how short or long the consolidations were. How long do you think, or how aggressive do you think this consolidation is going to be in your mind?
I think it's gonna be short.
You think it's going to be short?
Because let's face it, man. Like let's say the players in the market have changed so drastically. I, I'm a bit torn. I'll be honest, because okay, you know what I'm thinking right now. Before, when we had the first move to the downside, the first move to 30K, which happened when was that, Sean? Back in June, July. Basically, the first move down from the 60K region, right? And that was when retailers stepped in. That was when my mom called and she's like, should I buy Bitcoin or should I buy Ethereum, right? And and so we noticed that a lot of retailers stepped in during that phase of the market. This phase, we could see sort of a shift in hands there, right? We could see the money sort of get exchanged between retailers and perhaps institutions. But the way I am looking at it now, you can correct me because you have, you know, your knowledge on this is way better than mine. But I'm thinking that these guys are coming in with big bags. They're not going to be able to eat everything up in one go. They'll have to sort of DCA, that way they're not pushing price up on themselves and sort of even spooking the market in a way, right? Thinking that, oh, if someone comes in with a really, really big bag to just buy it all up, that could cause like a crazy wick, and then, I don't know, they could turn price up on themselves. So I'm saying that we could see a consolidation as opposed to like a quick consolidation, maybe 4 or 5 months.
You're talking about institutional investors coming in and DCing. Yeah, this is I'm going to try to phrase this in this is how I see it. Okay, I could be completely wrong. Okay, and I understand this, guys, that this is speculation. This is how I view the world, and my views are really contrarian. Even though I'm a trend trader, my views are contrarian. It's hard to explain why. But while I think institutional investors, I think you're right on the institutional investor aspect of things, Krisha. I also think that a lot of institutional investors are dumbasses. They're stupid. They are sheep. They are bandwagoners. There are only a few institutional investors. And the more I study, the more I learn, the more I begin to believe this, right? You get disillusioned by this idea of institutional investors knowing what they're doing and they control the markets. They are emotional. They have the same feelings as we do. They go through the same. In fact, they go through more pressure than we do, because we have to handle only our money, right? Our conviction can remain a lot more firm through these volatile moves towards the downside that are going against your position, far more than institutional investors who rely on, I don't say rely on, but they have to constantly appease their investors who know nothing about their investments, right? Their investors who are giving them the funds, giving them the money, know nothing about Bitcoin. And when you get the call saying, hey, why am I down freaking 1,500 basis points on my investment with you? What's going on? This position was in profit, but now suddenly you're on the red. They have to answer those questions over and over and over again throughout the week. They start feeling the pressure, right? And at one point, they don't want to deal with it anymore. We all watched the movie Big Short, right? You guys saw the pressure Michael Berry had to go through during his trade on the real estate market, when he shorted the real estate market, right? His investors were freaking sending him hate mail, threatening to sue him, etc., because he took a risky move. So they have all of that pressure. So let's say we have a cohort of, this is the Venn diagram for institutional investors, right? One big circle of institutional investors. Out of these guys in the pie chart, this is a pie chart, maybe 10% of these guys are actually in the Bitcoin position or in the crypto position because they have conviction. The rest of the institutional investors are just bandwagoners, just following because they heard that Paul Tudor Jones bought Bitcoin. They're just following because Stan Druckenmiller bought Bitcoin. They're just following because Bill Miller bought Bitcoin. Bill Miller bought Bitcoin with freaking conviction. 50% of his portfolio is in Bitcoin. That's conviction. You don't do that unless you really understand what's going on with the macro market, with what's going on with the Fed, understanding how they are trapped, understanding how the edge is in your favor heavily, asymmetrically. You don't do that unless you have that kind of conviction, right? Stan Druckenmiller, Paul Tudor Jones, they were leaders. They were the ones who actually started doing it before anyone else. So they believe in their position. And the reason they stand out, the reason they are legends, is because they are right when the rest of the institutional investors are wrong. Think about it. Even in the macro space, even in the institutional space, there are winners and losers. And even in the institutional space, only 5% are at the top. So you can literally use that idea to understand this Venn diagram and know that 90% of institutional investors are effing wrong most of the time, and they make stupid mistakes like selling a Bitcoin, right? So I think, Risha, that we may see a prolonged, going back to what you said in that institutional investors might be wanting to DCA in, I feel like there's going to be a lot of sell pressure from institutional investors as well, who are scared about what the Fed has said recently about tightening and may want to be getting out of their position. So rallies would be sold into, and we may actually see a prolonged move that may last. And when I say prolonged, I'm talking more like into June, July, maybe let's say, and April, right? April, yeah. So I don't think we're going to V-bottom up. I don't think so. So yeah, all of that to say this. I don't think we're V-bottoming up.
Yeah.
Does that make sense?
I think that makes sense. Yeah, because right now, guys, look across the board. Don't just get too fixated on crypto, eh? Like, look across the board right now. Look at the traditional space as well. Pull up SPY, pull up NASDAQ, and you'll notice that everything's taking a hit right now. So these huge investors and these, let's say, hedge funds and stuff, they're going to start balancing things out, and you can expect them to start hedging in some ways. right? And if they have to reallocate or de-risk from some of their, open positions, especially if it's as volatile as crypto, they're likely going to do so because, well, they're answerable to their clients, right, to their investors. So we could see that actually happen. I don't think, and this is something that I'd mentioned in my last Bitcoin video with you guys, where, and I don't think this is going to be like a COVID thing. So what happened during COVID, right, where we just had that massive sort of move to the downside and then a crazy, let's say, basically it was a V bottom up.
Yeah.
I don't think that's going to happen this time because the sort of the economic landscape back then was way different than it is right now. This is very planned and very orchestrated, whereas that was not too planned, not too orchestrated. What had happened there was a huge panic in the market because of, the whole COVID thing, the whole COVID scenario. And, well, the Fed had to step in, and they already had the rails for quantitative easing, and that sort of concept of quantitative easing had already settled in from the 2008 financial crisis. That's why they were able to just go ahead and push money into the market, and that's what led to that V bottom up this time.
Yeah.
This time around, however, it's not the same thing. Here they're literally posturing hawkish, which is they're saying that they're going to start increasing rates. Increasing interest rates means that markets are likely going to start sort of, plateauing out. I'm not going to say dumping per se, but I'm going to say plateauing. I think long term everything is bullish because the dollar is just going to end up devaluing.
Yeah,
but for now, this is the scenario. I'm not getting scared from Bitcoin. I'm going to be collecting Bitcoin. Sean, are you collecting Bitcoin or what?
I'm collecting Bitcoin, but I'm not doing it the way you are, right?
Yeah, I've already bought spot at around 30.
Yeah, I mean,
6.
I was.
And if it goes lower, I'm buying more.
You can't not buy spot over here. This is the monthly Kijun, FYI guys. This juncture over here is definitely worth a trade, worth a long-term trade. It's a monthly time frame, right? So definitely. It's not that we can't lose this level. We can, and that will be a signal on its own for a deeper move. I'm thinking 19,000 at that point. Wolfie is probably frothing in the mouth. He's been waiting for a long time for that level. But speaking of Wolfie, I do want to go ahead and entertain a few questions from the chat, Krisha. So let me just pull up the chat real quick.
Let's go.
Ooh, we have Garima in here. Garima, it's been a while. How are ya? Oh no, Garima was here in the last stream as well. So good to see you again, Garima. Good to see you. Let's see. Do we have any questions? AJ says BNB 1 year ago. Okay, that's not a question. Ace, how's it going? Yeah, it's good to see you, bud. It says 100%. But everything you're saying here is so true. In the end, it's the only way to keep a hand in the market when it really counts, and when you look back, it's all worth it. Yeah. I think you're referring to the idea that you don't need to catch the top or the bottom. Wait for confirmation and then put on your trade. And in hindsight, when you look back a couple of months away, you're like, that was as good as the top. So we didn't catch 68K. In fact, we were bullish at 68K. But we stopped being bullish at the very least at the break of 60K, 58K, and that's good enough for me, man. I'll drop another piece of wisdom that I picked up from all the readings and the advice I've gotten from other people. You don't always need to trade both sides of the direction of the market. You don't need to. Let's say you're trading leverage long towards the upside. You don't need to take a short position if you are leaning towards a downside move, right? You don't need to say, you know what, I'm going to put on a short just because I think Bitcoin is going down, or because Solana is going down, Ethereum is going down. No, you don't need to put on a short. You could literally be very successful in the space by saying, you know what, I'm not gonna take even though I think Bitcoin's dumping, I'm not going to take a short. But what I'm going to do instead is not be long. You can make a lot of money in the long run, guys, by literally not being long during the right times, right? All of this is to say you don't need to be in a trade all the time. Just not being long is good enough to make money. Because think about it. Because I was not long while everyone was like still being hopeful over here. I had the mental space, I had the gunpowder, I had the capital, I had the margin space to take this bounce trade over here, right? I went in with conviction. It was a big position size, got in, got out, and I was like, okay, why? Because I was mentally preparing for it. I wasn't short over here. Yeah, I don't want to give you guys the wrong impression. I didn't go short here, right? I didn't have enough confidence to do that, but I had enough confidence to not go long and close out all my long trades. Because I closed out all my my leveraged long trades, I had gunpowder to take this trade here, right? So that's the piece of advice I think you guys should all write down. I do not need to be in a trade all the time. I can make money in this market by simply not being long at the wrong times. Don't be long at the wrong times. Don't be short at the wrong times, right? Just not being in a trade is a trade. Not being in a trade is a trade. Okay, I'll stop. Kusha, go on.
Let's no, this is
I'm just in a good mood today.
Yeah, I'm like in a super good mood. I'm trying not to. It's very hard to be in a good mood when times are bearish. I sort of took note of that. Because sometimes, you know, I mean, you can't help it. If you've caught a good trade, you know, celebrate. Always celebrate your wins. Michelle says, Christian, my boss reached out to me and asked about Mango. He wants to join the seat. Do I point him to you? Yes, sir. Point him to me.
Your boss. That's awesome.
That'll be cool to have him or her in the seat chat as well. How would you feel about that, Vishal?
Oh wait, that Vishal said that.
Yeah.
That's awesome. Okay, wait, I'm trying to pull up the chat. I lost my window.
But no, by the way, like, this is where, by the way, psychology counts. Now, this is the time, for those of you who actually survive this and you'll stick around, you'll understand what really matters in this market. Psychology, your mindset, and how you take your wins and how you take your losses, that's what matters ultimately for traders. And I actually honestly believe that you could give everyone out there all the deepest, darkest secrets of trading, all right, from all the best traders in the world. And if you don't have your mindset pat down, you will fail. Like, I'm a firm believer of that. So it's very, very important. So when Sean sort of dispenses all of this you know, wisdom on you guys from experience, it's coming from somewhere. Like, we've felt pain in the market before, and this is what we've learned. So take note of everything right now.
Yep. All right, so back to the comments. I'll take a few more comments before we scrolling up quickly so I don't miss any comments. Okay. Visha, is there any questions that you're seeing in the comments that you think we should address?
Sorry, I'm just scrolling up.
Ace says Krisha's video from the other day said it all about Bitcoin. Atta girl, Krisha.
Yay! There's sometimes, yeah, I come out, I'm like, okay, you know what, Sean, I did a video on Bitcoin. I think it went well. I think I gave them my best.
Stephen Watson over here says something interesting. He says, Stephen Watson says, looks like the dynamic is more genius than anything. Maybe just stick with the dynamic. Okay, so what a few people do know, and many people don't know, is that the Mango dynamic is actually designed after my own system, right? So I designed the Mango dynamic to essentially be able to filter through my altcoin trades very quickly instead of going through my entire checklist of all the things I use. And I use it as a convenience trend indicator for altcoins. And then I started noticing that, damn, it's really, really powerful for even Bitcoin, which is why I don't go against the dynamic, right? I don't trade against the dynamic based on the time frame I'm trading, of course, because again, like, if the trend on the daily is long, there are going to be times where the 1 hour trend is going to be short, and you can't let the 1 hour trend push you out of your daily time frame, right? So keep that in mind, guys. But going back to what you're saying, maybe just stick with the dynamic. Yes, that's what you should do. Stick with your freaking edge. That's the entire point of the stream. Sometimes when I'm constantly saying that Be disciplined, be disciplined, be disciplined. And that's the mango word of the year, actually. Be disciplined in the long run. At the end of the year, you're going to be like, damn. You guys just need to go through that one time, you know. Be disciplined for 1 year, and you're going to see the success that you've had, regardless of the pain that you went through in the interim, on a weekly basis, on a monthly basis. You look back at your year and you're like, damn, like, it all worked out, so I'm just going to keep doing this. That success that you have at the end of the year will motivate you to just keep being disciplined regardless of the pain. Then he goes on to say, yeah, well, there are parts of the dynamic where you would have missed chunks of a good trend. Exactly. You're not good. No system is perfect. You're going to lose sometimes. You're going to miss out sometimes. But it's not about that. It's about catching when you do catch a trend, you will catch a really good trend. And when the trend ends, you'll be out of the trend, right? So I don't need to catch every win. Just need to catch enough to be successful at the end of the year, right? So yeah. Vishal, do you want to talk about?
Yeah, Vishal says the dynamic plus the dashboard changed my life. It's half of the seed program in a box, the other half risk management. Speaking, so I completely agree. By the way, the Ethereum trade actually caught based on the Mango dashboard, believe it or not. Like it's performing so freaking well right now. I am so happy. I got up this morning. I'm like, yes. But no, I don't know about you, Vishal. Have you looked at the new volatility indicator that's been slapped onto the dashboard? Like, it is actually phenomenal. That's actually what helped me catch the short on Ethereum. Otherwise, I would not have been as confident as I was when I did catch that short.
Krisha made...
It was, when I caught the vol on Ethereum, like the vol was like super low. It was like in blue territory. And I'm like, you know what? This is a good short. And I was sort of rigorously testing the vol at that time because, well, it was a new indicator. And I'm like, you know what? I want to get more confidence in this. So I started doing that. And so I basically, what I've been doing, by the way, guys, for those of you who have access to the premium version of the dashboard, combine the vol, right? When it's low volatility and you got a trend short, and if you're looking at price sitting on support and it breaks support, that is your clue. That is your clue in that, okay, there's something happening here. There is a trade set up right in front of your face. And this is about to pick the hell up.
Yep, exactly.
Right? So that's what, that's sort of what helped me catch that one. The dashboard has been spectacular recently. So big props Mock and Shanks on that one.
This is turning into a beast of Aces. You can use this as a system now, right? On its own, because think about it, Krisha. If the volatility is high in the direct... Did you say something?
No, go on.
If the volatility is high in the direction of your trend, leading into resistance, in a bull market, you use that together. Those are, okay, we're in a bull market, we're long, vol is high. Well, you use the Mango philosophy together to understand that, wait a minute, we could likely break this resistance level over here. But at the same time, because you're seeing volatility high, you can start taking some profits off the table because any pullback you can add to your trade if you want to, right? But on the flip side, let's say you have only 2 out of 3 flags where we're in a bear market, vol is high, and we're coming up against resistance or support. In that case, right, you want to probably take profits because that volatility, the volatility over there is either going to get knocked back down, which is what happened, by the way, with Cardano, right? Krisha, I think in the Cardano video, the duo video that we talked about, you said that, wait a minute, Cardano's coming up high over here at around $1.55, $1.60-ish, but the volatility at the time was 90, right, Krisha?
Yes.
90, and you had specifically said, I remember during the video saying, you said, I think we're likely gonna see some resistance over here, and we did see resistance, and what do you know, there was continuation of that resistance as well on Cardano. So yeah, Krisha, I think you're right on how we should be using this volatility, because Krisha was the first one to say this, that we should be using the volatility as a way to measure the likeliness of seeing resistance at a particular level. So at 90 resistance, or rather 90 volatility, at resistance, likely going to see a pullback. Correct? That
was actually Mock. He had come in and he had basically given everyone in the Grove a quick write-up on how to use the volatility.
Okay.
That's what I first took that thesis that he gave. He basically posted in the Grove, and I started testing it with that, and it worked like a freaking beauty.
That's awesome.
So that's what I was doing. Another quick question I want to take, Sean. Now this is aside from the dashboard. Someone had asked, who was that? Chen.
Okay.
He's like, why? I was thinking, wait, where was that? Chen. Oh yeah, why accumulating Bitcoin? Can you explain this to me? Is an altcoin sweeter than Bitcoin? So we're accumulating Bitcoin, Chen, because that is our high conviction play. Even as far as the fundamentals are concerned, we know Bitcoin in and out, and that's why we're long-term investors. Notice I'm using the term investors in Bitcoin, right? Not trading, investing. Yeah. So our time horizon for Bitcoin is a multi-year time horizon, right? But this is after knowing everything we need to know about Bitcoin. Now, people would be DCAing some of the altcoins to the downside, and this is one thing about investing. If you're looking to really hold something for the multi-year time frame, you need to understand what the project is about. This is something that I always implore people to sort of know, understand the sort of the network effects of it, as far as what it's all about, and if it's got a good team and stuff behind it. However, for those of you who accumulate, or someone who's accumulated, cheap, I don't know, some shitcoin somewhere during a bear market, it rallied, they made a killing on it, and you know what? Good for them, right? They feel smart for that sort of time period, and that sort of gives them the confidence to go and jump into even riskier trades, even riskier assets, without really doing any sort of research on it, because the first trade they did take, right, the first investment rather they made, worked out really well. But what happened, and this is what we saw play out in the last bull run, where people had like this crazy dumb luck going in their favor, right? And that basically gave them this confidence to keep holding stuff that they knew nothing about. And they held all the way into the bear market.
Yep.
Right? So the trend, literally, I kid you not, guys, like we know people who've lost fortunes, okay? The trend literally turned on them, and they still kept holding. Because they had like that initial sort of inertia, I guess, working for them as far as the luck was concerned, not really looking into to projects.
These projects went to zero, guys. These projects went to zero. You know what's a really good exercise all of you guys could do? And I did this, right? And that's what probably protected me. I'm not sure whether CoinMarketCap still has this data, by the way, but back in 2017 and 2016, it definitely did. You can find the historic snapshots of the top 20 or the top 50 coins that were on CoinMarketCap. Rather, which were the coins that got into the top 20 for each year, each month. And you're going to see that many, other than Ethereum, XRP, LTC, of course, Bitcoin, I think those are the only 4 coins that have been consistently, right, in the top 20. There are coins that you will find in 2016 and 2017 that were in the top 20 that aren't even in the first 4 pages of CoinMarketCap anymore. Now, do with that information what you want, right? Because that may give you some perspective as to how you want to position yourself. And this is why Krisha is saying that you need to have conviction in your positioning in your trades if you want to hold it for a yearly perspective, for a long-term perspective. Because we've seen people where their millions have turned to zero, guys, zero. And they had conviction in those coins based off only promises coming from a CEO who didn't know what he was talking about. Right, Krisha?
Pretty much, exactly. So the luck will work for you to an extent, but then as soon as the cycle changes and the music stops playing, and it's time for you to get off the table while you were there dancing, you need to take those, not take those cues, but it's hard, like that luck changes on you with the cycle, right? So you do not want to be caught there with a shit bag in your hand, and that's what we saw, and it was painful to watch that, man. Millions were lost, guys. Freaking millions of dollars just gone, eroded.
And everyone feels like a genius during the and I told you guys this in I said this to you guys just before the bull market began. I'm like, there are going to be a lot of new traders who are going to outperform me during the bull market. They're going to completely outperform me because their ignorance leads to arrogance, that leads to conviction, false conviction. And it's so good to have conviction in a bull market, right? Because you make so much money. But that same ignorance and conviction allows you to hold on to complete shit coins that are worth nothing during a bear market. And everything will go down in the bear market, right? Ethereum, Bitcoin, even coins like this that have solid infrastructure and building and development, even those coins will go down. But you know what? Ethereum, Bitcoin will come out from the dust from $80 to $3,000 and recover. But there are coins that were in the top 20 on CoinMarketCap that got annihilated in the bear market that never returned. And they're probably like on the freaking 10th or 20th page on CoinMarketCap today. And unless you really have edge and you really believe in that project, you got to be careful with putting your wealth into those projects, guys. So be careful.
Bingo.
All right, Gusha, do you want to talk about your short trade on Ethereum? Like,
Oh yes,
yeah.
yes. Ethereum and Matic. I
So
took the Matic
you
trade
took
yesterday.
let's start with the Ethereum trade. You took the Ethereum trade
let's start,
on
yeah.
like
I even posted a video, by the way, for those of you who wanted to know more about the Ethereum short. I actually posted a video right before I took the short, and it said "short trade setup." That was literally the title of the video. But no, it was very clear. Okay, so are you on the chart? Sorry, I'm not even looking at the YouTube screen right now.
Oh wait,
Okay, yeah. So Ethereum essentially. Sorry, go on.
I have to interrupt. AJ just mentioned that he uses KuCoin for short trades since he's in the United States. And I just want to make a quick announcement that KuCoin has been added to the dashboard. So you guys now have access to coins that are on KuCoin. If they're available on KuCoin, you should be able to see them on the dashboard. If not already, by Monday, you guys should be able to see all the KuCoin coins on the dashboard. So yeah, that's just a quick update for all of you guys. For those of you who are new over here on Mango, you can find the dashboard at app.mangoresearch.co. So yeah, Kusha, Ethereum, we got the call on the dashboard 4 days ago, and I'm still on the dashboard. So should I switch to the chart?
Yeah, go ahead. So no, first off, I caught the trade on the dashboard, right? I caught on the daily time frame. The daily essentially told us that hey, Ethereum was short. That was the trend on it. But the volatility, now we're seeing that the daily volatility is currently sitting at 78.
Yeah.
Right, and it's freaking flashing red in our faces. But when I caught it, it was at blue, Sean. So the volatility was not there yet. It was just about picking up, right? And I could see that, hey, there was an uptick there, that volatility was increasing. I'm like, okay, so now that I know that, okay, Ethereum's volatility is low, however, hey, the trend is telling me that it's bearish. Now, let me go ahead and look at the chart. What's the chart telling me? So I get on over to the chart. Now, there's one thing that I have always mentioned about Ethereum. Now, this is, by the way, this is where you can learn, right? Sometimes you're going to look at a chart and you're going to find an edge on the chart. And the edge that I found on Ethereum was the fact that, hey, the signature here is so neat. It plays so freaking well off of just support and resistance horizontals, right? And that was an observation I made very early on when I started trading Ethereum. So once again I looked at that on the weekly time frame. I'm like, you know what, Ethereum, and Sean, just get on over to your weekly and just smack the horizontals on there if you can, and you'll see how well Ethereum really trades off of this. Right? So that's essentially what I was looking at. That's what I drew out for you guys in that last video. And I said, you know what, guys, Ethereum's got a great short opportunity and I'm going to be shorting this. So what I ended up doing is, while we were still in the middle of the range, now this is something that I have been doing where I always draw in a midpoint, right? Do you guys, I'm not sure, for those of you at least who watch my videos, you guys know that for me to really find momentum on a trade, and for me to get that edge and that, hey, even if we're in the middle of a range, you know, where's it really leaning towards? So, are we leaning bullish or are we leaning bearish?
Wait, so allow me to interrupt you for a quick second. Could you just let us know what your levels are so I can quickly mark it out?
So let's.
So the top of the range.
Give it to you. Yeah. Okay, the top of the range, right? So the range I was looking at came in at around. What was this? Sorry, my lines are just covering it right now. Let me just get the coordinates for you. And the top of the range came in at around $4,000. So just mark out 4,000 on the weekly time frame.
Okay. Okay, I see.
Then mark out 2,852.
2,800. Okay.
And 52. Yeah.
I think I have that marked
2,852.
out almost. Okay. Good enough.
Right. Okay. And then what I was looking at. So now, Sean, just draw the midpoint between the range.
I see.
So I honestly, it was just keep it simple, stupid.
Ah, this is perfect. Nice.
Keep it simple, stupid. Right? This is like half of how you trade. So I literally shorted the midpoint. And that midpoint, guys, now I usually draw on the midpoint to basically give me the tip off and that, hey, you know what? Price is in the middle of a very, very critical range. But who's got the edgers, the bulls or the bears? Right? And depending on where price is relative to that midpoint, I get the inkling from there. I'm like, hey, you know what? We're hovering underneath. We are getting rejected off that midpoint. And man, we are really, really getting rejected off of that.
Yeah.
So the very next test I got on the midpoint, I shorted it. Right? I took the short position
Wow.
on there. And yeah.
Krisha is trying to contain her excitement at the moment while the theme's going.
I was
low
very,
and low.
I'll tell you what I was really proud about. Okay, now this is where I say always celebrate your wins. But what I really, really wanted to celebrate there, more than even the gain on the trade. Oops, sorry, that was some construction going on. But even more than the gain on the trade, I wanted to celebrate the execution. I think I was very proud of the execution. This is something that I have, it's always been a pain point for me. So this is something that I have been practicing, and this time I really sort of got a pat down.
Yep. Execution is far more important than people think about. People don't think about execution enough. And there was a video I had done back in 2018 that emphasized the importance of execution, where I talked about how I messed up on my trade, where even though I got the direction right, the timing right, I got the third factor of the trade wrong, the execution, because I was ready to short Bitcoin. In fact, I was talking to you guys about it the entire period. This is Ethereum. Let me go ahead and quickly pull it up for you guys. We'll come back here in a bit. BTC. Because I think you know what I'm talking about. It was during the entire rally from 3K to 14K, and we were patient, and we were about to short Bitcoin right over here at around 10,300, because we had got all the triggers. Our system that we were waiting for the trigger for like weeks, right? And we got the trigger and we were ready to short Bitcoin. And I messed up on the execution because I got greedy and I tried to take a short-term trade. And in the interim that I tried to take the short-term trade, Bitcoin dumped on me. Even though I told all of you guys on camera that, hey, it's time to short Bitcoin. I freaking went and longed Bitcoin because we came down on mid-time frame support, even though we got the trigger on the weekly time frame to take a short on Bitcoin. And I got the timing right, I got the direction right, and I messed up on the execution because of greed. And now you guys have some perspective. All of you who are on seed especially know why I sit back and I let the low time frame trades go away from me, because I don't want that happening to me again, where I miss out on a big trade because I got greedy for a short-term trade, right? So execution is very, very important. I'm going to switch back to Ethereum now. And Kusha, when are you going to be taking profits on your trade now? You're like deep in the profits. So is it here 2,300?
I'm looking at 1950.
1950. Ouch, man. I did a video back in December where I talked about Ethereum coming down to around 2,600 monthly levels, and I got so much shit in the comments for that. They're like, "Oh, you think Ethereum's going to come down to $2,500? You must be out of your mind. Keep dreaming." I got so many bad comments on that video, and now we're here, guys. We're here. So Kusha saying,
so I feel like this current juncture, by the way, for Ethereum is like a mini bound zone, right? Because now this is the middle of the range. That's where Ethereum's at right now. What's the price? Yeah, 2,336. That is like the middle of the range, so we could see a bounce here. If we close underneath on the next 12-hour, I'm saying we likely fall further.
okay, so let's go ahead and use the dashboard to try and get some clues as to what may happen.
Oh yeah,
Right?
I think that's a good way to do it.
Okay, so I'm looking at Ethereum on the day time frame. Volatility is already at 78, but I would say there's some more to go. You're right. You're right. It could go a bit further.
Yeah, but notice how the lower time frames have like a much
Yeah.
higher volatility
Yeah.
reading, 93. So even though we could get a bounce,
Short-term
I'll be
relief.
looking, yeah, I think short-term relief.
Short-term
I think
relief,
that would
yeah.
be the
Short-term relief, bounce, people sell to get to cut their losses, and that bounce may also come from people saying that, you know what, we'll take some profits on a short here, because shorts closing out their positions, guys, they're essentially buyers, right? If you think about it, when you're closing out a short, what are you doing? You're actually buying into the market. So that's why shorting is a really, really important and healthy feature of the market, because it adds a liquidity to the downside moves, because people who are short on the higher levels tend to want to take profits on the way down, right? But to be able to take profits, you are being a buyer. So when you're a buyer, you add that buy pressure or that buy liquidity while the price goes down. It allows price to not go down in a one quick move. It allows price to actually go down in a healthier fashion, which is, by the way, you're going to notice all coins that don't have two sides of the market tend to go down super fast or go up super fast, because of what I just explained.
So what's the sentiment right now, Sean? It feels there is a lot of fear and hope all together, just mixed in there.
Visha, you were talking about
Sorry,
simplicity. You were talking about simplicity on your charts. I think the simplest way to trade Ethereum and Cardano too, for that matter, Cardano and Ethereum,
Oh my God.
weekly dynamic, literally.
Yes, yes,
in
literally
that video in December before our vacation, that was what the video was about. We lose the weekly dynamic, we're coming down to 2,600, right? At the time, it seemed ridiculous because we were sitting at $4,000 at the time. Well, we're here, guys. We are freaking here. It was that simple. We lost the weekly dynamic, and yeah.
Gotta keep it simple.
It wasn't looking good all the way back in December. I should have been far more aggressive with my bearish posture, but it is hard to be when the trend is like this, right? But yeah, I'm just glad I wasn't caught with my pants down on any of these trades.
Oh, amen to that.
Like I said, guys, just not being long is a trade on its own. It allows you to be in a position like we are in today, profiting, as opposed to thinking, oh my god, like I don't want to ever go through that again, man. I've been through that. I've made those mistakes. Never again.
Lots of good trades waiting to happen still. I feel like Cardano is sitting on critical support. I think that could be a decent opportunity. But we'll talk about that when it breaks. I don't think Cardano is really broken yet. But yeah, still a lot of great trade opportunities. We can move on over to Matic, Sean. We can talk about Matic.
Okay. Tell us about your Matic
lesson
trade.
in Matic that I want to really talk about.
So should we start with the chart or the dashboard?
The dashboard, of course. The dashboard, technically, sort of the Matic call on the dashboard came in a while ago. It was just the timing, and anyways, let's first look at the trend on the dashboard.
The daily or what time frame?
Yeah, the daily. We can start off with the daily, see where the
So
trend is.
5 days ago, called the short on this 60%.
Yeah. So Matic, it's a funny story, by the way, with Matic. For those of you who have been following the Polygon Matic videos, you guys know that I was a bit bearish, well, 2 weeks ago, right? And I, believe it or not, I took a short on that. I sort of jumped the gun and I took a short on Matic that sort of went against me. So I had to get out of my trade. So that one went south, and Matic just sort of rallied to put in a new lower high on the chart.
Wait, hold up. You're talking about too many
go
things at the same time. Kusha, you're too
sorry.
smart for us. Slow down. So you first took a trade that didn't go well.
Yeah, this happened about like a week and a half, 2 weeks ago.
So should I switch to the charts where you want to talk about that first? I think you should.
Okay, yeah, cool. That's fine.
Okay, so I switch to the charts.
I mean, I wanted to sort of talk about this after Ethereum because I learned most of my lessons on
Matic.
this trade.
Okay, so I'm looking at Matic on the weekly here.
Right.
Where'd you take your trade?
So you're gonna. This is where Sean bashes me in his head.
No, I'll bash you publicly. Don't worry about it.
So okay, so I'm like, all right, guys, Matic. So we saw like this beautiful, beautiful ascending triangle, right? It looked like even a bull flag, and we saw a beautiful break. However, now we've been smacking up against support for 1, 2, 3, 4, 5, 6, 7 weeks. 6-7 weeks just smacking up against support. And let me tell you something: in a bull market, if you do not see that continuation and it's just smacking on support for 7 weeks in a row, there's a good chance that's your signature on growing technical weakness, by the way. Okay, especially if your thesis is that this is a bull market, guys. This is a raging bull market. No, you need to see continuation in 7 weeks, guys. All right. So when I saw that, I'm like, Matic is looking freaking weak here, man. Where's your
horizontal? Because I have mine at $1.93.
The same thing. Okay, so we pretty much our charts look alike right now.
1, 2, 3, 4. Okay. I was just not counting right. All right, cool. Yeah.
Right. So we were consolidating over there. I'm like, this is not looking right. This is looking weak. So I got onto video and I gave you guys my analysis. I'm like, guys, if it breaks, I think that's a good short opportunity. But me, like the idiot that I am, I went and jumped the gun because I got super, super excited looking at the chart. And I shorted, Sean, wait for this. I shorted into the dynamic. Okay, so I shorted that region, I shorted support, and I got punished. And price, and look at him just like, rubbing his face there. I shorted support. Sean's like, again? And it bounced on me, right? And so I had to get out of my trade. I'm like, oh, shucks. I'm like, I had to get on my trade. I took the loss. So I took like a very, very small loss. I got invalidated, right? And
she doesn't tell me any of this, by the way, guys, because
he bashes me so much. He's like, again?
We used to trade together. We used to share an account together, and it's because of things like this. Our trading personalities don't gel.
Oh man, we used to get into these little tips. He's like, what is wrong with you? Why would you take that trade? Why would you keep putting yourself in the same situation? Coming back to this trade once again, right? Okay. So I got invalidated. I jumped out of the trade, but then suddenly I was feeling bad about it. Okay, I'm like, you know what? I need to take a break. So I go out for a walk and then I try to clear my head out. I'm like, no, I think I'm right on the direction. And I'm trying I'm like, Chris, just wait for it, okay? You're right on the direction. Just don't get too, and this is something else, by the way, guys. If you're wrong on a trade, you're invalidated, even though, the macro direction that you've sort of picked is the right direction. However, in the interim, you've sort of jumped the gun.
You can get back in.
If you have to get out, just get out, okay?
Because you can get back.
Now, notice how I handle this. I said, you know what? I'm going to take a step back. I did not get into any trade after that. Okay, I just took a little break, a couple of days, but I was observing the chart. Every day I looked at the chart to give me the tell on it. And then I finally got the bearish tell on Matic. Finally. And I jumped back in. But I did not let that previous loss on the trade affect me this time around. Even though I could have very easily thought to myself, I'm like, oh, but I had a better sell. I had a better short position. I could have retained that and I didn't have to take the loss and it would have worked out well, but instead now I'm sitting here shorting lower.
Yeah. That's so rational, right?
It's irrational, right, at the time. But if I had gone in with that mindset and I was stubborn and I did not jump back into the short, even though I was shorting at a price lower than what I had got before, I would have missed out on this move.
That's
right. So even though I had to jump back into the trade at a price lower, I did.
Yeah.
It took away a bit of my edge. It took away a bit of my profit that I could have had if I just stayed into my original position. But I said, no, nothing doing. I'm just going to reset. So it's about reset. Okay. Just hit that reset button if you have to. Go ahead. Hit the reset button. It's okay. And jump back into the trade with new variables. Always reset your mindset, reset your variables, get back into a brand new trade. The slate is clear. The trade is new.
So
Do not let the previous one affect you.
Think about how irrational it is to allow yourself to say, you know what, I could have gotten a short from 244 to 142. So that would have been a 40% win, right? Or got a nice 40% win towards the downside. But because you missed that, you decide to say, you know what, I'm also going to miss out on this trade from $2 to, again, $1.39. So that would have been a 30% win. So because you missed out on a 40% win, you decide to go ahead and miss out on a 30% win as well. People do that. You guys have probably done that, right? It's irrational, but we all do that. Because you could have gotten in a better position, you wait for that to come again or nothing. So you're like, I want that 40% or nothing at all, right? And we've all done that. We all make those psychological mistakes, but you got to catch yourself doing it. It's not about not allowing those thoughts to enter your mind at all, because they will enter your mind. It's about those thoughts entering your mind and then you catching it and being like, I got you. You're the bad Sean. That's not the Sean I want. You catch that Sean and you throw that Sean away and you execute the way you're supposed to instead.
Boom.
All right, so let's go back to the call.
Trade,
yeah. Yeah. So you, so
at $1.90 actually. So I was initially gunning for I was hoping for a bounce. So at that point, Matic already started bleeding. Now this was yesterday, right? Matic was already on its way down, and let's say I caught the bounce. But I initially thought that maybe I'll get greedy on this. Maybe perhaps I could get a bounce at around $2 or something. But no. I got a little too greedy, so I said, and price did not come up there. So I said, okay, you know what, screw it. I'm just gonna jump in. Price had broken the next sort of major region of support that came in at $1.94. So I caught the bid at $1.90, and yeah, I've been riding it since then. Now this is another thing about getting greedy on your bids, right? When you've observed, when the key observation on the chart is that, hey, this is coming down, the trend is looking aggressive, right? The downtrend is looking aggressive. This is where I don't suggest getting too greedy on your bids. Round in on a region of a good level to get in a bid at. But if you're looking for something higher, at least from my observations and from my experience, when the trend is too aggressive, you don't usually get those crazy bounces, because there's a lot of sell pressure, there's a lot of fear building up in the market right now, and there's more sell pressure than there is buy pressure coming in. So I got too greedy on the $2 bid, and so I ended up catching $1.90 instead. So yeah, that's just a quick thing. So yeah, I'm still riding this one. Ooh. Where to, I haven't decided yet, so I'll have to sort of come up with.
So you're just gonna play the trend, no targets?
I'm gonna. So that's the thing with short positions, is no trend, right? That's something, Sean, we learned the hard way. In a way, I learned the hard way at the very least. There's no trend, but as far as horizontals are concerned, I'm looking for Matic to the very least. Now this is a bounce zone that I'm looking at, but if this falls further, then Matic could actually come down to $1.22. Is going to be the next region that I look at.
$1.22.
Yeah, if it shows more weakness there, then I'll be staying in my trade. However, if it gives me sort of a clue on price turning around, that's when I'll start sort of taking profits at the very least. I won't take off the entire thing, but I'll be taking a bit of the position off the table.
I think we are supported around $1.33, and if we don't hold $1.33, we could be coming back down to $1, like $1.08. So not the prettiest picture right now, but the entire market is taking a shit. So that's what it is. All right, so let's go back to the comments now. Let's see if we have any questions on Matic. Do you guys have any questions for Krisha in regards to her Matic trade? Now's the time to be asking questions on psychology, questions on execution. Everything's fresh in her mind right now, so she can answer you guys with a lot more education involved. So in the meantime, I'm just gonna scroll up. Wolvie says Sean and Krisha have different trading personalities. He doesn't like shorting support.
Wait, what did he say? What did he say? I'm scrolling. Ouch.
Oh my god, that's hilarious.
This is why I never talk to him about my trades. He's always bashing me.
Yeah,
especially when I mess up and I'm like super embarrassed. I'm like, no, I cannot tell him about this.
I mean, I make stupider mistakes though. Like, you guys don't want to hear my mistakes. My mistakes are all execution mistakes. Like, because
No, you barely have any. Like,
my
execution is like pretty on point.
but when I do make execution mistakes, they're painful. I lose a lot of money, like stupidly. And the difference between me and Krisha is that Krisha's so supportive. She doesn't give me any shit whatsoever. She doesn't give me any shit whatsoever, ever. Right? She's so supportive. Like,
Sean is just the opposite.
yeah, I'm just the opposite.
I get a lot of tough love. And for me, he's like, Krisha, you know, this trade didn't go too well. I'm like, it's okay. Take the next one. It's fine.
Ooh,
As long as you're taking your losses quick.
Exactly. You can't take your losses quick on an execution mistake though, because it's like, anyways, I'll go through all the execution mistakes I've made in a separate video, but it's painful, man. But Vishal says, Sean, Dashboard pinged me about Matic from the bottom, 12-hour mango. That's awesome, man. So what was your trade exactly, Vishal, if you could expand for the audience? Mock says, I think we're getting bots in the live chat now. Really? What?
We have graduated. Besides Mock he's not feeling good about this, Sean.
Mock's not
Gotta
feeling...
read between the lines. Because Mock is the bot.
Oh, right. He's not feeling special anymore.
Mock the bot cannot have competition. No, but I'm kidding. Yeah, the bots are a problem. Is there a way to...
Elena's asking about an options course. Mock put up a poll on Mango Seed asking about an options course. I hesitate. So Elena's like, can I pay for your options course that you're creating? Can't wait for it. If we do a early release on the options course, for like an early bird kind of thing, it will be like a cheaper price for those who do enroll into the options course ahead of time, kind of like how we had for Seed. For those of you who don't know, by the way, Seed at one point was only $650 for the early bird users, or rather members, right, or whatever you want to call them, seedlings. So if we do that, it'll be something like that. And now if we do go into a bear market, it's more likely that I get the time to actually make the options course.
And the pressure is here now. It's not just from me. Like I low-key, I walk into his office and I see him put on his options positions, and I'm like, explain this to me. And the thing is that I tried taking an options course sometime, like a couple of years ago, and man, I didn't understand shit. I'm just like, no, screw it. I think I was too intimidated by the material at the time, and I had just about started trading. That's when Sean was teaching me how to just, you know, trade normally, like TA and stuff on the chart. And this time around, like when he was explaining it to me, and that's the thing, right? All the other options courses out there, like they first teach you the jargon, but I don't know, when you were explaining it to me, Sean, like you approached in a very methodical, very
non-jargon way.
Yeah.
Like,
yeah, and it made so much sense. And that's the thing, the way, like, it really depends on who explains it to you and how they do it, right? That's the thing with options. I feel like it's more of a strategy play. Like, you can make money on either side in so many freaking different ways, and it's just about really expressing that trade using options. And so Sean's been teaching me. I've been sort of bugging him every now and then. So yeah, Sean, come up with your options course. That way even I can learn.
I genuinely believe that a lot of people talking about options on YouTube and on Google, etc., they don't really understand their own instruments. Now, they might be options traders, but they've learned how to trade in a very mechanical method where they don't really understand the history of the instrument or the actual use of the instrument, like what they were actually created for and how you're supposed to actually really use them, etc. What they're doing is they're reading off a playbook. They're like, if this is happening, I'll execute X strategy. If that is happening, I'll execute B strategy. If that instead is happening, I'll execute this strategy. That's why you ask people, or rather when you talk to people, they ask you about, hey, could you explain so-and-so strategy? Could you explain that strategy? Could you explain this strategy? And the first thing that goes through my mind is like, the strategy itself is not important. The instruments that you use to construct the strategy is what's more important, because once you understand the instruments, you can construct every strategy, and then you'll find out later, oh, so that's what it's called. Okay, cool. But what's really important, guys, when you're trading options is for you to read the current market conditions. Ask yourself, what kind of trade would I love to put on, right? And then once you understand what trade you want to put on based on your thesis of the current market conditions, you use your instruments, right? You use what options you have, right? And then you're going to find out that, oh, the strategy that I wanted to execute has a name. So, and once you understand that, you have power. You have power because you're free from the shackles of the jargon that the options world throws at you.
Options. You got options, guys.
Yeah, know your freaking options. Options and futures are somewhat similar, if I recall correctly, but I'm not gonna bother with either of those right now. You should, Tan, you should learn how to trade the futures markets, though, right? Futures, options and futures are not the same. But Tan, have you watched my video on funding rate on YouTube? It's up on YouTube. Kusha, could you link it to them? Could someone link?
Yes, that is a brilliant video. Like, I cannot stress this enough. I mean, I said brilliant 3 times there.
Alina's asking you to define a bear market. Tough question.
Me?
Yeah.
Okay.
He specifically says, I want Kusha to define a bear market for me, please.
Okay, so zoom out. So you're basically looking at, you want to look at so first off, I think to break this down very simply is you want to look at the market at a bird's eye view, right? So looking at it from the top. So for that, you're going to have to zoom out onto your macro timeframes. That's going to show you the cycle. So essentially, you want to get on over to a time frame where you can actually see the ebb and flow of a cycle, a proper cycle playing out in front of you, right? And when you do that, you're first going to notice, you're going to take notice of certain ebb and flows in the market as to when you see these crazy downturns in the market that, you know, they seem prolonged for at least a year or 2 years maybe. And then price starts flowing back up again, taking out highs. And then once again, it goes for a new all-time high, right? And then again, you're going to see a peak and once again, the cycle repeating. Now, in that time where it's running to the upside, making new highs, right? You'll notice that price usually follows a structure. And if you actually go and take note of it, right? Go and properly look at the chart, look at the signatures, you'll see that it's a constant ebb and flow of higher lows on these time frames, if you're looking at through a bird's eye view, right? Constant higher lows, ever so slowly. And then there's going to be a sort of a threshold, there's going to be a point in the market where something breaks there, right? And it takes out a low. So as soon as you see that break, you know that the signature has broken. And it's about understanding that and taking note of that and then observing price from there to see, okay, what happens from here on? Now that that signature is broken, what happens? And at that point, so now what we saw in this juncture right here in the market is that price took out a low, right? We rallied once again to put in a new high, got rejected, came back down, and now we're gunning for the next low on the chart. Or actually, we took it out, right, Sean?
Which low are you talking about?
Yeah, on the weekly time. I'm looking at Bitcoin right now.
We've taken out every pertinent low. We've taken out every low that's important.
If you look at the weekly time frame, like you'll notice that ebb and flow, that signature for Bitcoin actually broke on our first move to the downside, which happened in May, June. Right? That was the first time Bitcoin broke that signature. We rallied once again. And now this is the second time we're coming back down. So it's about understanding when the signature breaks, when that trend breaks. So look at the market structure, look at the price structure. And as soon as you find a break in that signature, that's when it's telling you that the market is doing something different. We're likely taking a turn here. So that's how you can assess your macro trend.
So that's a very, very, very good way to look at it.
How
Yeah.
would you look at it, Sean?
Look at what, the bear market? How would I define a bear
Yeah,
market?
how would you? Yeah.
I would define a bear market as a conjugation of lack of money flow into the market along with higher time frames putting in lower lows and lower highs. So I think I think there are multiple ways to define a bear market. It could be as simple as someone just mentioned in the chat saying, hey, as soon as the 50 SMA crosses over a another MA like 200 SMA, like basically look for the golden cross on the moving averages as opposed to the exponential moving averages. So over here, I'm looking at the weekly exponential moving averages, the 250, and we've not crossed yet, right? So you could say that, hey, we're not in a bear market yet because the weekly hasn't crossed bearish with the weekly 200 exponential moving average is not cross bearish with the 50 exponential moving average. But that doesn't mean that someone else does not consider this a bear market, and he would be right? He would be right to consider it a bear market. So you have to, in my opinion, add three factors: money flow. Okay, so again, this depends on you, right? How much money flow? Everyone's bear market criteria depends on their criteria, right? Depends on them. It's a very individual flag, in my opinion. Like, I could be looking at Bitcoin and say, hey, this is a bear market to me, I'm going to trade it as a bear market. To you, it might be, no, it's good enough for me. I don't think we're in a bear market yet. Maybe we're getting there. We're not in a bear market yet, so I'll continue to play my bull market strategies. But money flow is important too. Trend is very, very important, right? More important in my opinion. And three, these two go hand in hand, and without the two, you cannot define a bear market, is your time horizon, right? So for some people, they may say, let me just move all this. They may say, you know what? If the 2-day golden cross triggers, we are in a bear market. Could be the 2-day time frame. If we see the 2-day exponential moving average or the 200 exponential moving average cross with the 55 exponential moving average, we're in a bear market. To someone else, he may say, if the 2-day time frame starts putting in 2 lower lows and 2 lower highs, right? So lower low, lower high, lower high, lower high, lower low, lower low, lower low, right? If you see 2, over here I marked out 3, then we're in a bear market. Someone else may say, if you see 3, we're in a bear market, right? So on the 2-day time frame, we have 3 lower lows, lower highs, we're in a bear market. That's his trigger for a bear market, and then you trade the bear market. Or someone else may say 2 lower lows, 2 lower highs. So I think you have to put in multiple factors, and my bear market may not be your bear market, and your bear market may not be my bear market. So for example, a lot of people considered this a bear market over here. I got bullish here, right? It wasn't a bear market for me yet. Over here, however, I started leaning towards bear market territory. Why? Because I combined the 2-day time frame, money flow, etc., etc. I was like, this is good enough for me to not be bullish. At the very least, not be bullish. So that's my answer.
That's a good answer.
I hope so.
See how Sean and I, we have different set of ways we look at the market. Sean has a more, he always looks at the macro landscape, and that includes even money flow. That's actually a really, really important piece of the market. Hey, Vishal has something nice to say. He's like, just realized that we need to post this video. 20 years from now, when we're chilling on Mango Island, I need to show this video to my kid and show them price action and what I was doing.
That we should. We should. That's a good idea. I don't know, man. I've not done an IQ test. My best friend has done an IQ test, and he thinks my IQ is greater than 140 because his is 142. So I have to benchmark my IQ to his IQ, I guess. I don't think so, though. Like, 140 is really high. I would say my IQ is 100. Have you guys... Oh, the same question. Couple goals.
Yeah, he's gonna be making me wings tonight. See what I did there, Sean?
When are we ending the stream? I want wings. Hey, Julian, are you still here? Is this the following channel you were looking at? We're still respecting it, right? I don't take this seriously, guys. I've not been looking at that, so I don't know what I'm doing in that regard.
Apparently, Bitcoin got a bounce. Let's go ahead and just look at it quickly. People. So this is one thing, by the way, guys. When you see these bounces, you're gonna get excited for the interim, which is fine. But also, especially if you're in a trade and you see a bounce on the chart, do yourself a favor and zoom out to see what the bounce could mean, what the bounce could entail, right? Where could it come up to, and whether or not there's a point of resistance overhead that could even prove as a rejection point. Right? Especially if you guys are in a trade, you're there wondering, should you stay, should you get out? The bounces essentially gives you a point, a brand new point to manage your trade off of. Okay, so zoom out. When you see the bounce, zoom out and try and figure out what price is doing there, whether or not, where's the next reference point at, essentially. I don't want to say the next point of rejection, we don't know. But the next major reference point. In my opinion, as far as Bitcoin is concerned, let us see.
36k, start closing 15-minute candles above 36k, then you could be testing 37k, 37.5, start closing candles above 39k after that. We could close the week above 40,000. We close the week above $40,000, $42,000. That's gonna turn the picture around a bit. So if we manage to close this weekly candle green, and that's a huge if, that could be the first sign. But even then, I think these lows are going to get retested.
Oh man, if this weekly candle turns green, yeah.
I think Solana could test. Bullish. Oh.
What?
Wait, what? Why do I have a horizontal?
He'll like make a big noise, and I'm like, what?
Nothing. Don't worry about it. All right. Yeah, I'm just looking at Solana. Kusha, do you want to talk about macro before we wrap the stream? We are 2 hours into the stream now. I think we should be wrapping up.
We have been talking macro, so these are all the lessons that we've sort of learned from the last bear market. If anything else comes up, of course, we'll let you guys know. But yeah, for those of you looking to to talk TA and sort of get a community, especially in these times, it's turbulent out there, right? And you want a good sort of family, no toxicity, mind you, no calls either. We're just there to sort of help each other out and give each other some input as to what's happening in the market. Get on over to the Mango Discord chat, which you can find at themangoway.com/discord. I believe there's a link in the description that you can find. But yeah, you can come out there and join the fam for sure.
Yep. I'm looking at the 10-year yields. At the moment, Kusha, we're seeing that the bond market has seen a bid, and I posted this on the Grove, as well as I did a short update on the traditional section on Seed Chat, right? The traditional channel where we do. So basically, my thoughts are that I wouldn't be getting too bearish at the moment until we see yields bounce back up again. Because essentially, remember what we discussed in the last live stream. If you guys haven't watched the last live stream, I urge you guys to watch that live stream. We did a really long breakdown of I explained how bonds work, right? The relationship between yields and the actual bonds, and how it influences the actual crypto market. So as long as we're seeing yields actually come down over here, it means that the bond market is catching a bid. Now the big question over here that is on everyone's mind is this hawkishness from the Fed that has been coming in over the past few weeks, is it already priced into the market, right? Or we're seeing so much bearishness. Another question that everyone has on their minds is the Fed actually going to go through with their hawkishness? Are they actually going to increase their rates? And if they do, to what end, right? How long are they actually gonna hold those rates high for high. One thing I do want to keep, I want you guys to note is that the last time we had a similar environment was all the way back in 1979, and Paul Volcker, chairman of the Fed, who was recently elected chairman, came in, and at that time too, people did not expect him. People did not expect him to go through. My camera just literally fell off. People did not expect him to go through with hope that stays. Hold it through. People did not expect him to actually go through with increasing rates, but he did. He did, with a lot of political backlash, and the economy suffered. People lost their jobs, and then he ended up going and resigning as well. Not resigning, but he didn't want to get reappointed as chairman after. But he did what he had to do. He did what he had to do, and that's why he's considered a hero. The question is, can Jay Powell be as brave as Volcker was? That's going to be the big bet that people are going to be placing, or rather the big debate, and people are going to have to place their bets on whether or not the Fed will see this through, or whether or not they will pull back and get dovish again leading into the middle of the year. What are your thoughts, Krisha? Do you think they're actually going to be increasing rates and putting the economy under pressure, or do you think they're going to have to ease regardless of what they posture?
The latter. Because I mean, they're going to be in so much trouble. I mean, what they've got, like, I don't know. I still feel like I need to brush up on a whole bunch of mental models to understand how this works out. That's why I'm sort of still reading. But right now, I mean, with the mounting debt that they have, if they increase rates on themselves, they are obligated to pay those rates off. Right? So how much are they going to be paying just towards interest?
Yep.
And it's like, it's at that point, it's like dead money. And
the dollar's rising too, so the dollar's strengthening. So
what about productivity? Like, there's so many jobs in the States just outsourced. Not just that, there's also the entire thing that you mentioned yesterday, which was, let's see, international borrowers of the US dollar.
AJ, you are completely right. Volcker was the Batman of the Federal Reserve. He is literally considered I mean, that's not the term people use, but I think if you said that to anyone who's in the know and understands what happened back then, they would say, yeah, he was Batman. Jay Powell's not the hero of Gotham. We don't know, you know. I was thinking about this in 2018, AJ, and Krisha, you may want to, you may be interested in this too. My theory. I could be completely wrong here, but Jay Powell was actually looking to double tighten back in 2018, right? He had a very hawkish strategy on the markets. He wanted to target the debt issue. He wanted to decrease interest rates and also draw down the balance sheet. And what do I mean by that, guys? He wanted to sell bonds, right? He wanted to essentially not just stop buying bonds. He didn't only want to stop quantitative easing. He wanted to sell bonds back to the market, and he wanted to increase rates, and he increased the rates, right? So he essentially double tightened. So if you use that as backdrop, the fact that he just got re-elected, is he going to use his duration now to actually do what he's always wanted to do and go out with a bang? Or be painful to the markets, right? But Volcker did it. Nobody expected Volcker to do it. And he did it through 1979, 1980, and 1981. It took 3 years where he increased rates, Krisha, from 10% to 20% by the end of the year. Like, in 1 year, he increased rates all the way up from 10 to 20. Nobody expected him to do that, but he did. That's as good as... Jesus Christ, man. Just think about that. It's as good as going from 1 to 2% in terms of how the bonds will react, right? The bond market will react. So
yeah.
If with that information now, how do you frame the situation? What's different? Like, why do you think Jay Powell wouldn't do the same thing? Why wouldn't he increase? Nobody expected Volcker to increase rates, and he did. So what's different? I'll tell you guys what's different, but I want you guys to tell me what's different.
I'm thinking.
The difference is that Volcker had the luxury of having, and it's all, this is all easy to say in hindsight, by the way, guys. And I'll tell you why that element's really important. But the difference between J Powell's situation and Volcker's situation is that Volcker had the luxury of having a Fed for the past 20 years that inflated away the debt. The debt from 1940 to 1970 had already reduced from around 140% of GDP all the way down to 45% of GDP, right? So they already went through a massive inflationary period after World War II that lasted 30 years. So when Volcker came in, there wasn't a huge amount of debt that would have made the interest payments on that debt drastic for the Fed. Correct? It was still payable. So Fed increased rates from 10% to 20% on a GDP that was only 70% of, or rather on a debt level that was only 70% of GDP. This time, however, J Powell is still, I think at the moment, debt to GDP ratio in USA is around 122%. So J Powell still has to deal with that. So increasing rates is not as easy, but there are far more financial instruments available to J Powell. Far more, there's more technology available. The plumbing is a lot more sophisticated. So we don't know. We don't know. And I want to humble everything that we've said over here over the past month or two. And we need to acknowledge that we don't know what is possible. We don't know what may come in the next 1 year or 2 years. And we have to entertain all possibilities. And we have to be a little bit careful of entertaining the idea and the confidence that, you know what, for sure, they're going to be posturing and they're not going to increase rates. I want to say this. We may see rate increases. We may see 4 rate increases, and we may still see the market rally. That possibility is what people are not accounting for. And I think that is what we may see. Fed increasing rates and the market going up and up and up and up while the Fed is increasing rates. Now that is going to be a big surprise. What do you think?
That will be a surprise. I'm just... There's so many variables. So much. And you know, people often talk about manipulation. Manipulation in the crypto market, manipulation in this market, manipulation in the traditional market. I'll tell you what is manipulation. There's manipulation in the money market. It's the bonds.
Yeah,
that is that's where the major manipulation is happening. It's literally, they're literally telling you, they're literally coming out, okay, every month, saying that, hey guys, we're about to manipulate the market. Have fun. This is what we're going to do. And you guys can extrapolate whatever the hell you want to extrapolate from this. But we're about to manipulate. You know, people have a problem with manipulation, but that is the biggest manipulation that's happening right now. And everyone's so nonchalant about it. They're just like, yeah, the Fed speak.
Fed speak, indeed.
Richard Cardona, what
chart you talking about?
What chart is that?
I'm looking at Cardano at the moment, Kisha, on the bi-weekly.
Oh, that's a short waiting to happen. But can't jump the gun. Can't jump the gun.
She's so excited to short everything. She's my little bear. She's like, oh, that's a short waiting to happen. Look at her. She's foaming in the mouth here. She's like those bears on rabies, man. She's out of control. She's short Ethereum, short Matic, now she's short Cardano.
But it's too early though. It's too early.
What about Sol?
Getting a decent bounce across the board right now, guys. Decent bounce.
Sol was a great short. I'm surprised you didn't short Sol.
Yeah, I can't, like, that's the thing, right? I had to pick between gym and trading. I picked well, I think. Gotta get those gains in too. Yeah, Sol was a good short. Damn. Yeah, there's
Lukusha,
so much, by the way. There's so much.
NFTs.
Oh, I have so much to say about NFTs. Not really.
So maybe the next stream we can
okay.
talk about NFTs.
Yeah,
No?
I'm just gonna come out and say that I don't know. So I feel like there's still a lot of NFT hype, right? That's driving a lot of these prices. Still a lot of NFT hype, and all of the influencers talking about the NFTs have no idea what they're talking about. Some of them have even come on to very, very popular sort of news channels and stuff, being put on the spot, asking them to explain NFTs. And at least today I watched something, this was like a Toronto news channel. And man, the like, person like talking about the NFTs she had no idea what she was talking about, first of all. And they were trying to explain, she was trying to explain use cases to the interviewer. And she was lost, she was fumbling, she was stumbling, and even the interviewer was getting very, very confused. And it just felt like she was trying to convince herself on the use cases. And I'm not saying there's no future for NFTs, mind you. I think there is. I just don't think that we're there just yet. Right?
I agree.
I don't think we're there just yet. So there are a few use cases I can think of right on top of my head right now. I think, Sean, this is something that you brought up in terms of the gaming world. I think there's a proper use case there for now.
Yeah.
But as far as and art, of course, art for those of you who are into that. But
I think people who are dismissing NFTs don't fully appreciate the humans' need or humanity's need to express themselves as individuals, right? Our need to want to be unique and be able to express that is really, really strong. And if we are moving on over to a digital world, more so and more so, we have this ability now to express uniqueness through NFTs. Now, I'm not saying you should go out and buy NFTs. I'm not saying that at all. This market and the space will develop, and NFTs may be completely worthless, but in terms of their value, in terms of like dollar value, but they'll have a use for in a way that we don't fully see yet. I have ideas of how all of this may pan out. I don't think the world is there yet to. It's kind of like ICOs, but a little bit more. Do you guys remember how ICOs were completely? There was a huge craze. People thought it was the future, and then all came crashing down. And then people just lost complete faith in all ICOs, right? People started hating all ICOs, but ICOs still had a use case, and they still do have a use case. It's just that people are far too early on using them. Similar to the .com boom, right? People started hating the internet after the crash, but Amazon came out of it, Facebook came out of it. So there will be winners in the NFT market. I just don't think people fully really understand the potential, or rather the real use case. Like, and there's a strong use case. I just think a lot of people are just looking at the money. That's what they're really looking at, right?
Yeah. Like, there's a whole bunch of like garbage just coming out there now. Everything's an NFT. Literally everything's in an NFT, right? Everyone's just pushing that out right now. I think that the major capitulation is actually going to come in that market, because for people who don't understand anything, say they're getting payment in Ethereum, right? People who don't understand anything about Ethereum, now all we've seen so far is a rally, even getting into the whole NFT narrative. We've seen a rally for Ethereum getting up to the 3K region or whatever. And now we're seeing Ethereum actually take a dump, right? Now, the people selling these NFTs, they're collecting their payment in Ethereum, but what they're noticing now simultaneously is that Ethereum is falling in value. Now, suddenly this doesn't become and it's falling fast, it's falling hard, right? We can see that every day Ethereum is going through the...
Did something just happen?
Oh, could you hear me?
I could hear you, but I think my internet got disconnected there for a second because my my YouTube studio, we probably lost the stream. Not sure. Just confirm.
Stream seems on.
Yeah, I think the connection just dropped for a second. It did.
Cool, thank God it's back.
Whole stream crashed. All right, so I think we should be wrapping up now, anyways.
Yeah.
It's been
I
2
got
hours.
wings. I gotta start marinating. Get my hands in there. Crispy chicken wings.
All right, so with that, we're going to be wrapping up. I'll just give you guys a quick update on what we think Bitcoin's going to do. Okay, so remember what we talked about. Yesterday's video had basically segmented out the trading criteria, where we said on the short term we are bearish, which is why I was shorting aggressively in the short term time frames. In the midterm, there was no trade, right? So there was no trade, and in the long term, I was bullish. So now there's B for bear, B for bull, bullish. Okay. Now this has changed. Depending on how we close on the weekly time frame. I will not be bearish on the short term anymore. So this has changed definitely. In the midterm time frames, we can be bearish, but I want to wait for confirmation and see how price action actually unfolds leading into the weekly close. So I reserve my opinion on the midterm time. I have no opinion, so I'll say no opinion. And on the long term, I am actually bullish over here. I can't. My rules do not allow me to be bearish on the long term time frames. And I'm just going to quickly show you guys why. We have monthly support. We're closing the monthly in only 9 days. So as long as the monthly closes above around 3,650-ish, 3,000, let's say 37,000, not 3,700. 37,000. As long as the monthly closes about 37,000, I will hold my bullish bias. We have monthly dynamic there. We also have the monthly Kijun, monthly 21 EMA, monthly Tenkin, all coming in over there. So I want to see Bitcoin close underneath all those levels, right? Monthly dynamic, monthly 21 EMA, monthly Tenkin, monthly Kijun, close underneath that thick juncture over there. I'll likely get long-term bearish, but we're likely gonna Krisha has a nice theory on this that we will discuss in the next video or next live stream, where we could close underneath this entire level. So Krisha's theory is this, if I understand correctly, that we're likely going to close underneath this level, get chopped, right, where we literally live here for a bit and then go towards the upside. So Krisha's theory is essentially, if I had to draw it out for you guys, I'll try to draw it out for you guys over here. So you can tell me if I'm wrong here, but I'm going to draw it out for them. We put in that M.
Yeah.
Break the neckline, but we don't see the continuation. Instead, we do this. Right, Kusha?
Yeah.
Right? Something like that.
I think it's going to be a fake. It's going to be a break. People are going to look at the M. They're going to fixate on the M. And I think the reversal comes in at that break, and that's when people get scared out, because not just that's going to scare people out, that's going to spook the market, plus it's going to be a huge liquidity pool just sitting there waiting to just get tapped.
Yeah, because think about it, there'll be a lot of shorts coming in. I'm likely going to be one of those shorts as well. I'm going to end up being liquidity. So let's see how things play out. But I'm just going to keep following my rules. I know that as long as I follow my rules, even though I may get trapped into some bad trades, I'll be fine as long as I follow the rules, because the rules involve, or rather include, the risk management. Right, so I have my plan set in place. It's going to be an interesting market. It's not going to be easy, but mango, yeah. I'm going to keep it mango.
It'll be fun, lots to learn.
Yep.
Alrighty, guys. I hope you guys enjoyed this live stream. If you did, don't forget to hit those thumbs. Let's get that like rate up.
Yeah, this was an impromptu stream, so we're supposed to be sitting and enjoying our weekend today, playing video games and enjoying cocktails, but we spent our weekend with you guys.
To be here with you guys today. These are turbulent times, right?
Yeah.
Gotta be there for each other.
No one can say Mango ain't here during the bear market. We are here for every freaking bear dump. Every single one of them. We've been here live, in fact. Live.
Always.
Alright, guys. With that, do the Mango way, do the easy way, do the stress-free way. My name is Sean Dexter. Her name is Krisha. We'll see you guys in the next